Hey, it's Michael Saul, but everybody calls me Tiny, so you can too. And this video is, will the oldest trend in the book rear its head, plus a measured move target to watch. This is market analysis for the week of December 12th, 2016. And this starts the last 2 full weeks of 2016. The week between Christmas and New Year is usually light, but these next 2 weeks could have some further fireworks. Let's take a look at what happened last week. S&P 500, 5 days to the upside, new record highs. Dow, also a nice week. I don't know if this was a pause candle. It actually inched out a small gain, whatever it is. Still some nice expansion midweek into the end of the week. Shy of the 200 number, which is 20,000 on the cash index. Didn't get there yet. Still, though, a really nice move here for the Dow. The Russell, big move to the upside, little spinning top on Friday. Still an up session, though, 5 straight days up. Mid caps did pull in a little bit on Friday, down about 0.25%. But, I mean, the mid caps have been the leader here to the upside. So taking a pause is not that big of a deal. I think it's the mid caps and the Russell been moving together. Whatever it is, it's they're either 1, 2, depending on when you're looking. But maybe the Russell's taken over as far as percentage gains. Whatever it is, they've both been up some really nice gains. If I could speak, that'd be great. Okay, and here is the QQQ. This is NASDAQ 100. I got a question last week. Why do I use NASDAQ 100 instead of the composite? The composite is fine to use, but the NASDAQ 100 is more focused and it's used by professionals as a benchmark. You also can trade the futures on them. So in my opinion, it's more relevant to use the NASDAQ 100, and that's the Q. So you see, and it looks like it's at a new closing high. Not yet, not even quite yet, but still it looks like it's getting there, but it has not hit an all-time high yet. It's the only one out of the 5 major indexes that has not hit a new all-time high. And let's take a look at the quarterly chart to see it. 119.50, 120.50 is actually the high. It's not that big of a stretch to say, oh, we're going to get there. I have been calling it for a couple of years, and it sure has been taking its time. Once we broke the 78.6% retracement, and you can go back and watch my videos, and you could see I said, okay, now we're targeting at least a test of the high. So there's 2 schools of thought here. Are we going to double top if we get there? And we could double top before it, but like I said, at this point, it's whatever, 0.8% or whatever it is. So are we going to double top when we get there? Are we going to bust through it? If we bust through it, where is the next measured move? So that brings me to the measured move part of the title of this video. Kind of doing it backwards since I talked about oldest trend, since I mentioned oldest trend first. But let's talk about measured moves for a second. Now, I don't care what you're using. You want to use Elliott wave projections, you want to use Fibonacci, you want to use Gann angles, you want to use square of 9, any and everything, the magic T formula, any and everything you're using is fine. They're all great, valid tools. However, you still need price action to back it up. It's incredible to me how I read articles from bears saying this is all smoke and mirrors, it's going to end ugly, it's going to end violently, it's going to, the high is coming soon. Well, soon is not a number. And yeah, maybe it is all smoke and mirrors. Fine, maybe they're right. In the meantime, they're getting demolished here as the market continues to go right up in their face, and it's continuing to move higher. Jim Rogers said, and this probably isn't the exact quote, but it's in the spirit, so excuse me if I get it a little wrong, but a bull market will end on hysteria. I don't see the hysteria yet that's saying, hey, this move is over. Okay, whatever we're looking at, the Qs, we're looking at the S&P, the Dow, the Russell, whatever it is. Now, are we overbought? Absolutely. Are we looking for a short-term high? Absolutely. Okay, but what happens at that high? What happens at that stopping point? Do we just go sideways and then continue to move higher? Do we reject it hard and get a pullback? Okay, do we just get a mild pullback that lets the bulls in one more time? All that remains to be seen. And guessing at what happens, because what happens there when this finally does stop going up, that's more just craziness. You don't know until you see the price action, until you see the reaction what happens there. All right, until you see that, it's just all just pure guessing. And I know we are in the business to speculate, and we try to get the edges in our favor. We try to get as many edges as we can and put the odds in our favor. Okay, but that's just one. That's much different than just the one. This is the high. This is the low call. There's no. That's not the same thing. Okay, it's not the same thing as gaining an edge and making qualified, quantified, speculative calls. Okay, or speculative guesses, if that's what you want to call it. It's just pure. We're going to find the high here. The bottom line is the market can go much further than people expect it to. All right, so let's look. That being said, let's talk about a potential measured move here on the SPY. All right, and the way I'm getting this measured move is I'm bracketing this range. And what will happen when a range that has formed in a while breaks, it's a box trade, the move that comes out of it, whether it's to the upside or the downside, will go the width, well, I guess this is the length, and that's width, right? So the length of the range that it broke from. So using that calculation, all right, so I'm starting here, measuring it down to not really this low, but in between this low and this low. I took the middle, and then adding it on to a break of this high, I came up with 241.27 as the next move, the next major resistance for the S&P 500. Doesn't mean it has to get there. First, let's talk about the number in itself. If I am correct and it goes exactly to 240.27 before it turns, I am going to be extremely pissed because I can't believe I used my abilities here instead of picking lottery numbers. I don't expect that number to be the high. Come on. All right, I'm just using a zone, and quite frankly, I can use the zone of 240 to 250. That gives it what? I don't know, 4.5% little leeway. This is just the number I got from taking this move down and adding it on to here. Again, I am not looking for an exact number. Give me a break. But right here, that's about what? That's just about 15 points. So what is that, 7%? Maybe a little bit more, a little bit less. It's not that big of a move from here, but it's still, I mean, hey, an extra 7% of on what we've already seen. Yeah, that should bring the NASDAQ, the Qs, that is, through that double top and continue. Okay, because like I said, the NASDAQ is only 0.8 or whatever, just over 0.8% away. So even if it lags and it doesn't go as big as what the S&P would go, even if it goes half, I mean, that's still another 3 or 4% there. Now, I'm not saying we have to get there. I'm not saying we have to get there in order for us to stop going up. Okay, we could pull back at any time here. We're pretty overbought, and we also have an event coming this week, the FOMC meeting. It's Tuesday, Wednesday. The announcement is set for Wednesday. Everybody is expecting rates to get a little bump for them to raise, for the Fed to raise rates. And of course, the big thing will be, well, what's said in the statement and what are they talking about going forward and all that. So this move here is not all from the anticipation that rates are going to get a bump. All right, there's a lot here. There's the election. There's the thought that, okay, Trump's policies are going to be good for the market, changing taxes, it's all going to be bullish, it's all going to be great. But part of this is definitely in the anticipation of the FOMC announcement. So my question is, and this goes to the oldest trend in the book part of the title, is what happens when they do raise rates? Who's left to buy? If everybody's buying ahead of it, okay, what is the oldest trend in the book? Buy the rumor, sell the news. So what happens here if or when they do raise rates? Who's left to buy? Okay, it reminds me of an old joke. It's going to take probably a minute for me to say it, but I heard this from from Henny Youngman once, and he said that his broker called him and says, I got a great stock for you. It's $1. He goes, okay, buy me 1,000 shares. An hour later, the broker calls back. He says, okay, the stock's at $2. He goes, okay, buy me another 1,000 shares. An hour after that, the stockbroker calls. He says, hey, the stock's up to $3. So he goes, okay, buy me 2,000 more shares. He goes, okay, done. Calls him back an hour later, and he goes, okay, the stock is up to $4. So Henny Youngman goes, okay, sell. And the stockbroker goes, to who? Right, it's a great joke, and it really illustrates the buy the rumor, sell the news trend. Okay, if everybody's buying it in anticipation of rates getting raised, what happens when that occurs? Is there going to be enough buying power left on this stretch to keep the market going higher? Again, all right, I talked about the potential measured move, but again, you can't. It's just a zone, and it's not, it's definitely going there. It doesn't have to go there. But there is a potential for us to go higher here, but we are so stretched here. Look at this beautiful consolidation before the break. Even this small little consolidation here before the break. This is how the market likes to move. Thrust, pause, pivot, thrust, pause, pivot, thrust. Okay? Now, I still stand. I'm not looking for the start of the bear market or some huge monster pullback. That's not what I'm looking for here. But I do stand with my opinion that I have been talking about, that the pullback that does come when we stop going up, wherever that is, might be deeper than most people are expecting. Okay, a lot of people are thinking, oh, look at this, just a small pause, just a small pause. They may be looking for something like that, and I think the pullback could be much stronger than that. Not looking for a new bear market, not even looking for what could be considered a correction. But we are very stretched here. There are high levels of optimism. Like I said, don't think it's hysteria yet, but that makes me nervous, makes me real nervous. Could we rally into the end of the year? Of course we could. But I think we have a better chance of trading higher here if we pause and pull back first. Remember, we have 2 full weeks left. I would love to maybe see a couple of pause days, get a little short-term climax off of the Fed announcement, and then get a pullback, and then maybe even either go up into the end of the year or maybe drift down and then maybe go higher to start the beginning of the first. Remember, seasonally, the first quarter of a new president is usually bearish, according to the Stock Traders Almanac. But I'll talk more about that as we get towards the end of the year. So what is my analysis here? I think we are stretched. I think we have higher levels to be seen. However, I think a pullback is coming. It could be after the Fed announcement, could even be before the Fed announcement, right? But it could be before, it could be off of the Fed announcement when they do raise rates and there's nobody left to buy, right? Buy the rumor, sell the news. Don't think it's going to be the start of a bear market. Don't think it's going to be a huge correction, but I am looking for a pullback and a pause, and I do eventually think that will lead to higher prices. Any questions? tiny@attackthemarkets.com. Have a great trading week. Stay safe out there. If you're trying to pick a high in here, just use stops, okay? Not saying you're an idiot or anything close to that. Okay, if you think the market's overextended, you've done your research, and you feel the high is coming in, just use proper risk management. Okay, if you're going to do that. With me, I want to see more than just price continuing to rise as a sell signal. All right, I need to see some price rejection and a short-term pattern, even if it's on a shorter time frame, like a 60-minute chart or a 30-minute chart, something like that. And to me, I think the short side is definitely tradable intraday, but for now, on a swing basis, if you're doing a top-down approach with market sector stocks, you got to be really, really selective. I mean, there are sectors that are still acting like crap. Look at gold, for example. I mean, just Talked about GDX potentially being the stronger of the two. I still think that's possible, but just in no rush to bounce here. In no rush to bounce. Bonds getting cracked still. I mean, the trend is your friend, right? Do you just give it lip service or do you really follow it? And right now, this is just a monster move to the upside here. And the bulls are taking no prisoners. They are kicking the teeth out of the bears here. Any questions, like I said, tiny@attackthemarkets.com. Have a great trading week.